Hi everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. Today we're diving into a report from Beeline Holdings. It's got all the usual corporate stuff, but there's a little tidbit about a CEO donating warrants to charity. Is this just a nice gesture, or is there more to the story? Let's find out. Today we will look at the 8K filing for Beeline Holdings from March 25, 2025. A Form 8K is a report companies file with the SEC to announce major events that shareholders should know about. These events can include things like a change in leadership, a big acquisition, or as in this case, a significant investment by the CEO. Think of it as a company's way of saying, hey, pay attention to this. This report is dated March 25, 2025, meaning that's the day the event happened that they're telling us about. This is important because it tells us when this information became public. The company we're talking about is Beeline Holdings, a Nevada-based company. It looks like their file number with the SEC is 001381822. Now, let's cut to the chase and get to the core of this 8K filing, the announcement itself. Here is where it gets interesting. Regulation, FD disclosure, means that the company is sharing information that could affect the stock price and they're making sure everyone gets it at the same time. The announcement states that Nick Lutzer, Beeline Holdings CEO and co-founder, invested an additional $900,000 into the company's ongoing Series G convertible equity offering. A convertible equity offering basically means investors are given the option to turn their investment into common stock. In simpler terms, the CEO put in almost $1 million of his own money into the company. That can be a strong signal to other investors that he believes in the company's future. But here's the twist. As part of a deal, Mr. Lutzer received warrants. Warrants give the holder the right to buy shares of the company at a specific price in the future. In this case, he could buy shares at $6.550 each. However, he didn't keep those warrants for himself. Instead, he donated them to St. Jude Children's Research Hospital. The full press release is attached as an exhibit, so we can get all the details straight from the source. Now let's step back and think about what this all means. On the surface, it looks like a generous act. The CEO invests in his company and then donates a valuable asset to charity. That's good PR, but we need to dig a little deeper. Why is the company doing a Series G offering? Usually companies do these to raise money for growth, to pay down debt, or to fund operations. It means they need cash. The CEO's investment could be a sign of confidence, but it could also be a move to shore up the company's finances. The donation of the warrants is interesting. It gets the company good publicity, but it also avoids any potential conflict of interest if the warrants become very valuable. It is worth noting that donating something instead of cashing it out first can have some tax benefits for the donor, so this should be considered as well. So let's look at where Beeline Holdings stands overall. A key strength is obviously its leadership, as the CEO is heavily invested in the company. They have real skin in the game. One weakness could be the fact that they need to seek constant investment. Is the business model really sustainable? Overall, this 8K filing presents a mixed picture. The CEO's investment is a positive sign, but the Series G offering suggests the company needs cash. The warrant donation is a nice gesture, but it's also a savvy PR move. Investors should do their own research and look at the company's financials before making any decisions. Thanks for watching Corporate Decoder. If you found this analysis helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings. Let me know in the comments what company you'd like me to analyze next.